Hello and welcome to Startup Street. I'm Arundhati Ramnan and with me is Shruti Mishra. These are the top headlines from the startup world. Elon Musk sends a message to Twitter staff telling them that they have until Thursday to consider whether they wanted to stay on for working long hours at high intensity or take a severance package of 3 months' pay. Musk told Twitter employees that anyone who had not clicked on a link confirming you want to be part of the new Twitter by Thursday evening would be considered to have quit.
Twitter's paid verification service to relaunch on the 29th of November. In a tweet, Elon Musk says that he's punting the relaunch to ensure it's rock solid.
KB Group, South Korea's largest financial services provider, partners with Elevate Venture Partners as an anchor investor and co-GP through its subsidiary KB Investment. KB has committed $100 million, including co-investments, to the total fund size.
Higher ed tech platform Simplilearn raises $45 million in a new funding round led by GSV Ventures at an undisclosed valuation. CLAL Insurance and Disruptad also participated in the round. Simplilearn said it would use the funds to boost its growth plans in India and international markets.
Digital solutions for diabetic patients startup BeatO bags $33 million in Series B funding led by Lightrock India with participation from HealthQuad, Flipkart and existing investors. Now, the fresh funds will be used to expand BeatO's diabetes care programs pan-India.
Well, those are Ashwin Damera, CEO of EdTech unicorn Eruditus, invests an undisclosed amount in digital sports platform Kelomore. The investment was made through his family office, Damera Ventures. Founded by former international cricketer and CEO Jatin Paranjpe, Kelomore works as an aggregator of coaches and academies across Indian cities for sports.
Corporate volunteering platform Good Era raises $10 million in Series A round led by Elevation Capital with participation from Zoom Ventures, X to 10X, Nexus Venture Partners and Umidyar Network. Former Xerox CEO Ursula Burns and Flipkart founder Binny Bansal also contributed in this round.
Chinese tech giant Tencent's revenue fell 2% year-on-year in the third quarter as Beijing's regulatory crackdown on video games and the tech sector hit earnings. The company posted revenues of $19 billion in the third quarter, AFP reported. Domestic video games in particular saw a 7% decrease in the 3 months ending September 30. Well, those are the headlines we are tracking for you this evening. Content experience and composable architecture platform Contentstack has raised $80 million in its Series C funding round, and the round was co-led by Georgian and Insight Partners with participation from Illuminate Ventures. Georgian's lead investor, Emily Walsh, will join the Contentstack board along with Contentstack CFO, David Overmeyer. All three companies continue to grow their investment, with Contentstack contributing to a total of $169 million raised so far. To talk to us about the road ahead at Contentstack, joining me now is its co-founder and CEO, Neha Sampath. Neha, welcome to Startup Street. Now, Contentstack was incubated in India-based Raw Engineering before it was spun out to take on a more global presence in 2018. First, tell us what is the pain point you're solving, and then talk to us about your offerings and how they are unique.
Thank you. Thanks for having me on. Let me start with just saying, before I even started Raw Engineering, I was running a digital experience for a lot of large companies in the US. And in doing that, I kept running into the same pain points over and over, where every time you tried to do something, you would be slowed by the technology. And so the brilliant minds inside large companies want to build and innovate more quickly and do really cool things, but they're stopped by the legacy technology that's holding them back. And so we created Contentstack at Raw Engineering when we were servicing a lot of these companies that were trying to be more innovative, do things more quickly, and serve an omni-channel experience, meaning that digital experiences were moving away from just the web, but also to mobile and to all the other places where people are consuming digital content. So the pain point was mainly about speed, but also being able to do things in a more innovative way. So we created Contentstack to help companies do more things more quickly and empower marketers and developers and everyone inside an organization to do their best work.
Okay. Neha, you've automated and streamlined hundreds of activities across technologies and vendors in real time, like you were just saying. Tell me how you're helping enterprises unlock digital experience innovation more broadly and realize a significantly greater return on an investment. Tell me, how cost efficient are your solutions?
Absolutely. So the biggest thing that holds enterprises back is the time to deliver value. And so if you think about the large teams inside organizations that are trying to build really cool solutions and engage people, especially in this market where you have a lot of noise. You have social media, you have things popping in and off of your phone and on your watch and all over the place. You need to find ways to do things in a more efficient way. And so the technology platform that we've delivered democratizes how you deliver content to your end users, regardless of where they are, whether they're paying attention on mobile, on the web, on a billboard as they're walking by. We make it easy to centralize where the content comes from, but make it very easy to consume no matter where you are. And the beauty of it is that we know that there's a lot of talent that exists in organizations. We want to unlock that talent and make it easier to use what you know to do something that's going to move the mindset of the people that are watching your brands. And we just want to make it simple, but also help people to move at the speed of innovation and at the speed of their imagination.
Okay. Neha, let's also talk about the fundraise. How do you plan to allocate the $80 million raised? I believe you've got plans to recruit talent across India. How many and how soon?
So right now, more than half of our team is located in India. We're based in Virar, which is a suburb of Mumbai.
Yes.
But we also have offices in Bangalore and Hyderabad and Pune, and we'll continue to grow across all different technology roles, including the full stack from an application development standpoint, support roles. And we're also starting to set up go-to-market functions in India, including marketing and sales. So as we expand into Southeast Asia and other markets that are served by that time zone, we'll continue to build a team that's growing in India as well as the rest of the world. So the $80 million is essentially to let us continue on the journey that we're already on and keep doing what we're doing well, and also to expand our team over time.
All right. Now, you know, since Contentstack's Series B fundraise, which happened in June last year, you've doubled the number of customers served, nearly tripled ARR, while maintaining a 97% customer retention rate. Tell me, how have you been able to achieve this? Also, what is the road to profitability looking like?
Yeah, absolutely. So because we spun out of a services company, our mindset has always been very deliberate and careful about how we spend. We think about what's important for our customers, and we focus and double down on that. So the path to profitability means just continuing to do what we're doing well, continuing to grow, expanding our customer base, ensuring that we're continuing to provide a lot of value so that they want to buy more of our product and stick with us. That 97% retention rate demonstrates that once customers decide to move to Contentstack, they stay with us and they grow with us. And so we'll continue to go down that path and ensure that we provide the right customer care and continue to deliver a lot of value to our customers and partners.
All right, one final question before I let you go, Neha. The business and technology landscape is rapidly changing. You've some of the largest global brands as your clientele, with 42% greater than $1 billion in revenue, and 35% of them are publicly traded. What are the new trends you see emerging in this space? What are companies looking for?
Absolutely. I mean, it kind of goes back to the pain point, which is companies want to stand out in the crowd. They want to be able to empower their team members to do their best work, and the technology is holding them back. So our mission is to essentially unlock the talent that exists in your organization and give them the tools, the technology, the training, and the care that they need to be successful at carrying out their imaginative ideas when it comes to digital. And that's essentially where we focus. So when you talk about trends, it's omni-channel, it's being able to consume content wherever you are. It's personalizing that content so that it means something to you, and it's engaging in new ways. And so we empower all of that.
All right, Neha, we've completely run out of time, but many thanks for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you again.
Moving on, diabetes management app BeatO has raised $33 million in its Series B round of funding, led by impact investor Lightrock India. Now, the digital care platform also saw participation from its existing investors, including healthcare-focused investor HealthQuad and e-commerce major Flipkart, among others. Now, through a mobile app, the startup offers a comprehensive diabetes management and care platform via its glucose monitoring solutions. Joining us now to discuss this further is Gautam Chopra, the co-founder and CEO of BeatO. Gautam, thank you so much for joining us on Startup Street today. India is set to overtake China as the diabetes capital of the world, with over 200 million Indians at risk from it. Now, you specialize in managing diabetes. So what's the biggest problem in India, and how are you helping curb this?
Thank you for having me on your show. The problem which you said, Arundhati, it's not just the sheer volume of people with diabetes in India. It's also the fact that almost 80% of them who are diagnosed with diabetes, unfortunately, have uncontrolled sugar levels. And when you start really drilling down, it really boils down to two things. One is the lack of access. So when you look at the demographic of India, only just for 95% of the people actually live in tier 2 cities and beyond. And there you just have about 5% of the doctors living. And imagine if you're in a small town, let's say in Ajmer in Rajasthan, just to see a diabetes specialist, you would have to go all the way to Jaipur. And because there is this inertia, people, if they have to go to Jaipur, they'll perhaps, lose a day's work, the opportunity cost. There's always this inertia and procrastination, which results in perhaps these symptoms becoming, quite drastic by the time actually people start to take an action. The second key problem is, of course, of affordability, because India is predominantly an out-of-pocket market. And every expense that a person, who's diabetic actually incurs is through their own pocket. Healthcare insurance hardly covers for any hospitalization. So hence, because of these two problems, we see these uncontrolled sugar levels, spread across the diabetic population. And this is where exactly BeatO comes in, through our digital-first, full-stack digital care ecosystem that cuts across different segments of people with diabetes.
Right.
Caters to every need of theirs. So starting with the entire continuum of care, starting with the very essential use case of monitoring, where we bring in our cost-effective glucometers that simply plug into your phone. These are connected devices where people can start monitoring the sugar levels.
Right. So,
and as the data gets populated, we are actually able to drive positive health outcomes and take them to the other end of the spectrum, where we provide for a full-blown virtual diabetes
absolutely,
clinic.
And we're going to discuss that in further. So like you said, lack of awareness and affordability are two of the key things here. You've raised $33 million. If you could quickly tell us, how do you plan to use these funds? Where are you going to spend the money?
Yeah, so I think first it's about scaling our comprehensive care programs, which comprise the doctor, the entire nutritionist, the coaches, monitoring, medicines, and we want to take this to the length and breadth of the country.
Right.
Second is we want to continue to invest in our product and technology by making it even more engaging and clinically driven. And lastly, we have already a fantastic leadership team, but we want to strengthen it further and invest in our team to deliver on our promise to make BeatO a household name.
Right. So you've got three key areas there that you're going to spend your money on. Take us through some of the solutions you already have available. And like you just mentioned, you're also going to put money into products and tech. So tell me what you plan to offer with the on the product and technology front.
Right. So like I said, first is when we look at self-monitoring and self-management of diabetes, we already have a very effective solution in terms of the cost, connected devices that you plug into the phone, and, based on your readings, we're able to carry out proactive intervention. We're going ahead and actually integrating with a host of other devices, not only just in diabetes, but also looking at hypertension and others. And the second key thing around technology is how do we, make develop richer evidence through our care programs, and by making the entire staff, the team, virtual medical expert team comprising doctors and coaches, far more effective in providing the right decision support, the right intervention to the right individual at the right time, is only going to be possible when we're able to continue to enhance our technology. And lastly, as we're partnering with others in the healthcare ecosystem, whether these being pharma companies and insurance companies, where they're able to leverage our product and make solutions that can be integrated into their ecosystem. So this is where technology will play a big role as far as the future growth potential of BeatO is concerned.
All right. And you currently have about 15 lakh members on your platform. Take me through how you've helped raise awareness amongst people in tier 2 and beyond cities, and what's the traction you're seeing on that front? How affordable is your product for them?
So this is the most heartening fact of the last 1 year, and where 70% of the people or customers of BeatO actually come from tier 2 cities and beyond. And this is primarily because, this is where the infrastructure is broken and the need is immense. We've been successful in penetrating this audience because we made diabetes education, number one, very simple and effective, and actually in their own language. So it's all vernacular in terms of the service that we're providing. The second is making technology, whether this be our connected devices, extremely simple and affordable to use, including the app. And finally, providing access to excellent medical experts virtually, which otherwise these individuals may not have the ability to get in touch with. So I'll give you an example. We've actually launched a nationwide campaign called Aapne Sugar Check Ki Kya, which is a diabetes screening, where we're carrying out diabetes screening camps across the length and breadth of the country in partnership with Lions Club. And, in small places like even Sri Ganganagar in Rajasthan, it's shocking, but when people actually get screened, almost 25-30% of them actually have high sugar levels. And it's really heartening to see when you're even in these smaller towns, when people walk up to you and they turn out to be existing BeatO users, and they've seen so much of improvement, not just in their health, but overall quality of life. And this is basically our life's mission. How do we make sure that we can enter into across the nick and corner of India and ensure that diabetes can be controlled and we can make a positive impact in people's lives?
All right, Gautam, we're completely out of time on the show, but thank you so much for joining us, and we wish you all the best going forward.
Thank you very much.
Well, it's time for us to take a short break, but coming up next, a special conversation with Naveen Tiwari, founder and CEO of InMobi Group, on the funding winter and its impact on startups. Stay tuned.
Welcome back. You're still with us on Startup Street. Now, the Madras High Court has dismissed a petition which challenged the constitutional validity of the online gambling ban in the state. Now, remember last month, the Tamil Nadu Assembly had passed a bill which prohibited online gambling and looked to regulate online games in the state. However, the government has clarified that the ban is yet to come into effect. Now, Jude Sanith is here with more details and the highlights of this case. Jude?
A two-member bench of the Madras High Court today dismissed a bunch of petitions questioning the constitutional validity of the Tamil Nadu government's ordinance against online gambling that it promulgated in September. Subsequent to this, the petitioners withdrew their case from the Madras High Court itself. In fact, Acting Chief Justice of the Madras High Court, T. Raja, observed, and I quote, "Which court in the world agrees to hear petitions against an ordinance that has not received the governor's signature yet? Come back to us when the ordinance becomes a law," end quote. Incidentally enough, and just to give you context, the court was hearing a case from a bunch of online gaming companies represented by counsels Mukul Rohatgi and Arima Sundaram, while the state government was being represented by Mr. Kapil Sibal. Incidentally enough, the state government clarified that its ordinance had not become a law yet since it hadn't received the governor's signature, and it thus would not enforce the ban until it goes about becoming a law. In reply to this, counsels for the petition stated that their clients were receiving many visits that were being paid to them by officers of the state, often threatening punitive action within a week of the ordinance being promulgated. Counsel for the state government then said that it behooved the Tamil Nadu government to ensure that no such punitive action would be taken until the ordinance remains as such before it became a law. Subsequent to this, the court had asked the petitioners to withdraw and come back only after the ordinance and if it ends up becoming a law, after which this case was withdrawn from the Madras High Court itself.
All right, that's the latest on the online gaming ban. Moving on, funding winter and its immediate impact have been dominating the tech world for some time now, but looks like the funding winter and its immediate impact have been harsher on global market and been passive on the Indian market. Naveen Tiwari, founder and CEO of InMobi Group, told CNBC-TV18's Ritu Singh that funding winter is stronger globally compared to India. He also said that the startup ecosystem is facing a lot of challenges, but it is largely cyclical in nature, and the startups with good business model will survive this bad weather. Here's a slice of that conversation. Listen in.
Any cycle of evolution goes through these phases of ups and downs. In the larger macro picture, I don't think this matters, because is it going to slow India down? No. Is it going to slow our growth of startups and the exuberance of entrepreneurs? No. Is it going to slow down the exuberance of the investors? No. Is it going to actually, investor exuberance would be actually higher as things improve because of the geopolitical advantage that India actually has. So I don't think in the larger macro picture anything's changing. In fact, if anything, it's better and bigger for us. In the more micro picture, which is what you're probably referring to, where because the markets are what they are right now, I think, yes, it is going to cause some bit of, introspection by a lot of the companies on few fronts. I think one, if they are well capitalized, they'll have to conserve cash. That's just a need of the hour. If the business models of companies aren't supposedly, based on fundamentals where the unit economics are positive or tending towards positive, or if the business is not profitable, you will have to change the business model and you will have to change those things drastically. Then there are companies which are profitable. They will also make changes in reaction to the market, but those will be muted.
How do you expect these unicorns, these startups to come out of this funding winter they're currently in? Will a lot of them have to, end up looking at shutdowns forever?
Well, one thing about entrepreneurs, I'll tell you, they know how to survive, okay? And that's why they're entrepreneurs. They will know, they will figure it out. So you got to back an entrepreneur in most of the cases, if not all the cases, to say they'll figure it out. Now, in that figuring out, will they have to go through drastic measures? In some cases, yes, and those will be painful.
How is this cycle different from what's happened in 2008 and 2015 and from now? Because, it was the printing of money in the US that led to the startup boom, and we're seeing this bust when the Fed is tightening.
Yeah. Look, I wasn't necessarily that deep into the startup world in the 2008 meltdown, but I would say the winter is much stronger globally in the US than it's actually being felt in...
It's warmer in India?
Yeah, it is, exactly. And so I think that will certainly, when that really hits here, you would actually see a lot of impact, a lot more impact than what you're seeing right now.
But talking about investors, they have a lot of dry powder, which they've not invested in companies either because they're loss-making or because they're risk-averse. When do you expect this sort of funding winter to end?
Yeah, look, I think there is, in the last count somebody was telling me, roughly about $300 billion of technology-oriented, private equity money that's there to be deployed. So yeah, there is capital. What does that mean? That means nobody's losing faith in technology. Nobody's losing faith in the growing up of, of innovative companies across the globe. What's changing? What's changing is the pace of investment is certainly going to change. It's going to change because I think this whole fear of missing out that a lot of the investors had, it's gone out. They are under much higher scrutiny by their limited partners, and so yeah, they are answerable. It's the business that they run. I think they'll just wait for the markets to come back in, and they will be, I would say, they will be again investing, but maybe more cautiously. So I think overall for the industry, you would see it's a good thing because you would see a lot of discipline on both sides.
In this current environment, how are InMobi and Glance positioned? Are you also looking at making some tough calls at the moment?
So, we are a profitable company. InMobi, the ads part of our business is very profitable, continues to remain very, very highly profitable. In that environment, we certainly have to react to the market, okay, for sure. Why do we have to react to the market? Actually, even on the Glance side, we're very well funded because we recently raised capital. So we are very well funded and we have enough and more cash. But that does not mean we do not react to the market. We are going to we have reacted to the market. We just don't have to make drastic decisions. We have to make what I would call decisions around the periphery. Things that we thought we would get in the next 3 years, 2 to 3 years, we're not going to invest in anymore. Things that we thought, customers that we were servicing in hope for them to convert profitable, we're not going to service those customers. So there is those kind of things that we would certainly do. We have to react to the fact that the advertising market is coming down, and we get impacted by. We are a very large player in advertising. Yes, we do get impacted by it, and so we are reacting to that. But we are not taking any drastic measures.
How has it been for Glance? I mean, you raised about $200 million from Jio and others, and now, of course, you're yet to make profits. When do you see, the company breaking even? What is the path to profitability? Expansion plans there?
Yeah, so that's one of the changes, right? Because Glance is not a profitable business, we know how to make profits. That's one thing that we've learned because of our past. So we put that on a faster track, and the whole company has turned itself very, very quickly to say we will be a profitable company soon. It's hard for me to say when will that be, but what I can assure you that we will be a profitable company.
But broader timeline, a year-long period, a 2-year period?
I would say within the next 2 years for sure.
Okay. On the InMobi side again, you spoke about ad spends. They're also coming down. Yes. The lion's share is still with the big tech companies. How has business been evolving for InMobi in this environment?
Well, so there are two things, right? One, we see ourselves growing faster than almost all of our peers from a growth rate point of view. But that growth rate has come down from the absolute growth rate that we were seeing for the last several years. Yeah. So that's, so there is a depression because of the market, but yet we are taking share from others.
And with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.